Hey, what's going on, guys? Okay, so this is gonna be pretty short. I'm gonna just go through just a few things that are going on today. I am finally using a new computer, so everything should be a lot faster. Blah blah blah. Anyway, so what we know right now, and also additionally, now that we have this computer at our office, so now we can probably start streaming a little bit more frequently. So we can probably stream like during the day. We'll just talk. It'll be kind of long. It'll be like a couple hours every time, but it doesn't matter because I think we'll have a lot of our ideas and stuff formulated there. So that's pretty good. Now, what we're going to do is we're going to let me think. So what we're going to do is we're gonna go through real quickly. The TD Ameritrade is reports tomorrow, or I think it's this evening after market. So earnings at 121. Yep. So it's today they're reporting, and then Netflix is reporting as well tomorrow in the morning, I believe, or maybe it might be after hours today. Okay, just making sure. Okay, so yes, it is today. They're both today. Now, I am. My opinion is going to be structured this way. So first, I want to go through Amtd. So now, as a lot of you probably know about, back in October, uh, Charles Schwab had decided that they were going to cut the commissions to $0 for all of their stocks, and Ameritrade did the same thing, and a bunch of other brokers did the same thing. Now, there's a distinction that I think is pretty important to be made and understood, which is that for Charles Schwab, it is not as big of a deal. Commissions only make about 3% of their revenue. That's to my understanding. I think it might be more, it might be less. I'm pretty sure it's more. But yeah, and then for TD Ameritrade, however, it actually makes up about 36% of their revenue. Now the problem is, so I went into a Bloomberg terminal today to determine how much of it is coming from where, and so what I realize is, firstly, we don't have access to that information, but to my understanding, what actually is going on is TD has, while they have decreased the price of their commissions, they actually have kept the price of their options trading the same. And it's important to know that the volume in the option market is more than the volume in the stock market. It's just how it is, and it makes sense because everyone who's in stock is also in some sort of option to hedge their position. It's pretty normal to do. So it makes sense. So, but they didn't change the price of their options trading. So it is possible, and it's actually, in my opinion, we might have gotten a lot stronger of a volume uptick, especially in November when we kind of pulled into the bullish market. But we saw a lot more of bullish behavior, and this is the reason because we saw a huge volume increase, and the reason was partially because of the bull market, but additionally because of the fact that now they've attracted a lot of people using $0 commissions, and then on top of that, they're going to be doing what's it called? They're going to be it doesn't cost anything to start, open, and close these trades. So now they have a lot more people, and because it's free, they have more people in it, and those people become introduced to options. So I think the options market has increased in volume, specifically with TD Ameritrade, because they have a very good platform. A lot of people like it. So I think it is an important distinction to make and to understand that it is possible, in my opinion, that they might outperform what what they've been doing up until now. Maybe because the reason is they still charge 65 cents per contract, which means if you buy 10 contracts of something, which a lot of people do, which is still less than the price of a stock, in that case, they will spend $6.50 in order to, make that trade fully happen with 10 contracts. If you have 100 contracts, it's more, right? It's 60. So I think that's kind of important, that they're probably receiving quite a bit of revenue straight out of the what is it called? Straight out of the options market. Now that's important because that would actually give us the direction for how the rest of them are going to perform. So Charles Schwab, they haven't reported yet. So these different companies that have not reported yet, it'll be important for us to kind of figure out how the rest of them are going to react. Because if they all determine the same thing, then we have no reason to really be concerned and think that it's going to drop. So I think that it's very possible that Ameritrade will outperform. It is also possible that they won't, that actually this piece of information, because you also have to understand that in this earnings report, the reason we started coming back up was because this reported well, but that was also because they only very recently had implemented the drop in earnings from or very recently cut the commission costs. So that happened very recently, so it was not, you're not going to see it in this report. We are going to see it in this report, and that'll tell us how they're actually going to do. They already know, and I think it is going to do actually better than everyone is expecting. And so when that happens, you're going to actually, if it goes against the public opinion, which I think it will for a lot of people, especially because there's a huge gap here. You can actually, those options will get priced in a lot harder once the move already happens. So that's my opinion as far as TD is concerned. Now Netflix is reporting soon. Now here's the thing. So Disney Plus has been around for a little bit now, and as a result of that, these markets are a little bit of the streaming markets are a little bit of a stretchy territory. A lot of these are still doing pretty well performing as far as performing goes. Roku, for example, you can see it. Roku has still been kind of stagnant around this area, but it hasn't fully recovered the whole Disney Plus situation, and it hasn't lost it though. So that's kind of what I'm looking at as far as this is concerned. This was the level way back on the previous earnings that was established. I had bought credit spreads on this, and I'd made quite a bit on just that, on just this staying above 267. So I think this is a pretty big level. This is a good trend to pay attention to. It is possible that it could actually totally just fill this gap, and that's what I'm expecting. I'm expecting it to fill the gap just based on a technical idea. And it is possible that it would do this. It is not necessarily likely, but I think there's a high probability that it could happen, based on, they're not losing, they're not gaining viewership right now, and that's a very important distinction. I think in time I will be bearish on this company, but I'll have to honestly say I think this is a pretty big level. So 309, 315 is a pretty big level for Netflix to have to break, and if they do that, then sayonara to them. But yeah, so I think it's possible. I would say maybe go into don't try, read the what's it fucking called? I forgot what it's called. The disclaimer in the description below. But as far as everything is concerned, my opinion is that it might actually start breaking into this area up above. My actual opinion what I think is most likely is I think nothing will happen. It'll do a huge move in either direction, fully recover it, and stay kind of where it is. So if it tanks down, it'll kind of come back up and hold around, here or something like that. If it tanks up, or if it rockets up, then we'll probably hit this and then start pulling it back down anyway, because it's still going to fill the gap. So so in the aftermarket, if it breaks above here, it's still going to fill it. So I think it's better in reality to actually play a continuation on these positions, including TD. So that is my opinion so far of this market. Like I said, I'm going to probably start streaming and stuff like that more often during the actual trading hours. So we'll have that there. All right, guys. See you guys later.